Are mobile home parks the hidden gold mines of real estate? In this video, we will uncover how these overlooked investments can create massive cash flow and long-term wealth. They are low cost, high demand, and full of potential. Like this video and subscribe if you want smart real estate tips that deliver real results. Let us explore the value hiding in plain sight. 1. Understand the mobile home park model. Mobile home parks generate income from land rents while residents own and maintain their own homes. You are not responsible for home repairs, so expenses stay low and profit margins stay consistently high. This model creates stable recurring income with fewer liabilities compared to traditional properties. Parks often have low turnover since residents rarely move their homes once placed on the lot pad. High occupancy with low maintenance makes this model ideal for long-term investment cash flow. Mobile home parks are often undervalued due to outdated stigma and lack of investor competition. You earn income from rent on lots without the burden of property renovations or constant upkeep. The business structure supports passive income with strong returns and manageable operational risks. 2. Target undervalued or mismanaged parks. Look for parks with high vacancy, poor management, or outdated systems you can improve over time. Mismanaged parks offer lower purchase prices and can be turned around with strategic upgrades. Simple fixes like cleaning, landscaping, or enforcing rules can increase value and attract tenants. Buying low and adding value through better systems and service creates significant equity gains. Speak with sellers who are retiring or tired of managing and may accept discounted sale terms. Research local parks with complaints, bad reviews, or code violations and offer to improve them. Always inspect sewer, roads, water, and power systems before purchase to assess full turnaround cost. Targeting these parks helps you enter the market affordably and scale profits with better control. 3. Focus on affordable housing demand. Affordable housing demand continues to grow as more people seek low-cost living across all areas. Mobile homes serve retirees, low-income families, and people priced out of standard housing markets. Parks are recession-resistant because people still need places to live during hard economic times. Rent prices for mobile home lots stay affordable for tenants while offering strong cash flow to owners. Housing costs keep rising and many turn to mobile homes as their only realistic housing solution. This demand keeps occupancy high and late payments low, which is great for long-term investments. Cities and suburbs with population growth need more low-cost housing, and parks meet that demand. Mobile home parks can provide great returns while serving a growing social and economic housing need. 4. Learn the zoning and legal aspects. Zoning laws often limit new mobile home parks, which increases the value of existing park inventory. Older parks with grandfathered zoning are hard to replace and therefore worth more than they appear. Before purchase, ensure the park is legally compliant with municipal land use and utility regulations. Check permits, tenant rights, environmental rules, and restrictions before making any buying offers. Understand whether you can expand unit count, add amenities, or modernize within your zoning rights. Review rent control rules and eviction policies if they apply in your local county or city area. Hire a local zoning attorney if needed to verify every permit, license, and development allowance. Following the legal path protects your investment and helps unlock the true value of the land. 5. Improve park operations and efficiency. Upgrade roads, water lines, sewer systems, and common areas to boost value and tenant satisfaction. Modernize park signs, lights, parking areas, and enforce quiet hours to maintain a peaceful setting. Automate rent collection with online systems to reduce late payments and bookkeeping stress. Introduce basic rules and regular maintenance to raise safety, cleanliness, and living standards. Trim unused land and improve drainage, landscaping, and lighting for better curb appeal immediately. Add shared spaces like laundry, dog park, or playground if zoning allows for new tenant attraction. Hire a manager if needed or manage remotely using part-time contractors to reduce daily tasks. Better systems lower costs and improve tenant retention while increasing income over the long term. 6. Analyze cash flow and return metrics. Break down income from lot rents, storage, late fees, and any utility billing pass-through charges. Deduct operating expenses including taxes, insurance, utilities, and maintenance for net income figure. Compare net income to total investment for your capitalization rate and year 1 return goals. Use cash-on-cash return to measure what you earn annually compared to your cash invested amount. Look for parks offering double-digit returns with strong upside potential and low ongoing risks. Avoid parks with high expenses or tenant-owned utilities unless you are ready for infrastructure work. Use pro forma financial models to forecast future rent raises and refinance opportunities precisely. Sound financial analysis ensures you are buying a park that pays back quickly and grows in value. 7. Boost value with rent increases. Many parks have below market rent due to long ownership and lack of adjustments over the years. Research nearby parks to understand market rent and increase yours gradually with notice periods. Explain increases by showing upgrades, improvements, and better services provided under new ownership. Raise rent fairly so tenants stay and appreciate improved management rather than feeling exploited. Add utility billing systems to pass costs to tenants while keeping rents below alternative housing. Every small rent increase boosts park value since income directly affects appraisal and sale price. Use yearly evaluations to decide when and how much to increase without harming occupancy rates. This method quietly compounds your return without buying new property or adding more tenants. 8. Attract and keep good tenants. Screen tenants carefully with background and payment history checks before leasing any mobile lot. Focus on stability and long-term stay by renting to people who treat their homes with pride. Keep your park clean, quiet, and safe so families feel welcome and spread word-of-mouth referrals. Communicate clearly with tenants through notices, updates, and feedback systems to avoid conflicts. Reward long-term tenants with small benefits or loyalty programs for on-time payment streaks. Host occasional park events like cleanup days or community barbecue to build positive relationships. Provide fast response to maintenance issues to earn trust and reduce complaints over small problems. 9. Exit strategies and value scaling. Plan ahead for resale, refinancing, or holding long-term depending on your capital and market goals. As value increases, you can refinance the property to pull out equity and fund new park purchases. Bundle several parks together and sell to larger investment groups looking for portfolio scale deals. Create seller financing terms to attract more buyers and earn income from notes if you exit slowly. Use a real estate trust structure or syndication to expand ownership and reduce tax obligations. Add amenities, services, or rezone parcels for storage rentals or tiny homes if city rules permit. Every improvement raises the value multiplier and gives you new ways to monetize your investment. 10. Treat it like a real business. Create financial systems, policies, management plans, and long-term strategies to run your park. Set goals for net income, occupancy, expenses, and evaluate performance every month without fail. Keep records of all repairs, contracts, permits, and rent history to prepare for audit or refinance. Build relationships with contractors, utility providers, vendors, and local real estate experts. Stay updated with industry news, tenant rights, and changing regulations through landlord networks. Train any staff or managers with your systems and values so guests and tenants receive consistency. Treating your park like a business builds wealth, structure, and professionalism over time. This mindset unlocks the true goldmine potential that many overlook in mobile home park ownership. Mobile home parks might just be the real estate goldmines most people ignore. If this opened your eyes to a new opportunity, leave a like and subscribe for more investment strategies that work. Have a question or experience to share? Drop it in the comments. Thanks for watching, and do not overlook what could be your next big win in real estate.